So 2018 was the last time the Federal Reserve stopped raising rates. They didn't cut until, I think it was August 2019. So what happened was the moment the Fed went on hold, the markets went on an upside rampage. They were down kind of 30% and then they recovered. So not wildly dissimilar to now. And if I look out over the next year, well, the S&P did about 10%. The NASDAQ did about 14%. Kind of those growthy tech stocks, the kind of ARK style stuff, they did about 18%. So that was good. Bitcoin did 100%. And that's after it had gone up 400% and corrected. So, and even that didn't take back the all-time high. It took the following year for the all-time high to take out. So I think it's going to be a positive year, but that kind of choppy year where one minute you think, oh my God, it's going straight to the high. Then it's like, oh my God, it's gone back down. We're all going to die. And then it stabilizes. And it's generally, I think we'll look back and go, okay, we survived and we've actually made some money again, or made some money back. Let's put it that way.
Bitcoin is rapidly regaining its lost dominance in the crypto market so far into 2023. On January 30th, Bitcoin accounted for 44.82% of the total crypto market capitalization, the highest since June. In September, Bitcoin's dominance index was as low as 38.84%. The index typically rises when most crypto investors reduce their exposure to smaller tokens and seek safety in Bitcoin. The reasons include Bitcoin's better liquidity and lower volatility than alternative cryptocurrencies, or altcoins, primarily in a bear market. Hello and welcome to Crypto Street. In today's video, Real Vision CEO Raoul updates about his outlook for Bitcoin in 2023. Raoul also breaks down the importance of regulatory clarity in the space and how it will drive the future of institutional adoption in crypto.
It might be a more complicated year, but I don't think it's going to be that complicated. So macros, everyone suddenly learned, as they have to understand what macro is, because crypto got sideswiped by macro. They're like, what's all this interest rate shit? And it's now why you care.
Like the merge was supposed to make it pump. What happened? And it's like, well, the world collapsed.
So look, the world is driven, this whole space is driven by liquidity and network adoption. So the adoption of blockchain technology is ongoing and relentless, but the liquidity of how much money's around drives the space. So once you understand that, you understand a lot about the space. So last year was a massive withdrawal of liquidity. All the money came out, the central banks were tightening rates, all the banks stopped lending money, all of that stuff. And it meant that all assets went down, and crypto goes down the most because it's the kind of longest duration, highest risk asset. So where are we now? So here we are right near the end of the rate hikes. The economy is probably going into recession and pretty soon. And so what happens is the market starts to look forward and say, maybe they'll stop tightening liquidity and take the foot off our necks. And maybe things, because our job in financial markets, particularly in macro, is to live in the future. Looking around today is useless. But looking around, what is the world going to look like in 6 months' time? Are the Fed raising rates in 6 months' time? Almost a 0% chance, because inflation has peaked, growth is falling, we're going into recession. Normally, they would cut rates at that point. Now, they might be a little bit slow to do that because they really, really want to see inflation lower. But it means that the rate of change of all these rate hikes and all this bad news starts slowing down. The Chinese economy seems to be a year ahead of everybody else's right now. And they started some stimulus process before their lockdowns. And now they've really started to stimulate because, they'd shut down their economy. So we're already seeing this global money supply, and people can see me post this on Twitter from time to time, global money supply year on year and Bitcoin price year on year. They mirror each other. So when liquidity starts to come back in the system, prices start to rise again. So we're at that point, which is why I've been really interested. So in crypto, we've seen that. I thought June was the low, and it was in ETH, some stuff, other stuff, no. But the point being is we've thrown the worst possible news. Prices kind of stopped going down. And now we're starting to see liquidity when everybody else is saying, can't you see, you idiots, you're going into recession? How could you own JPEGs when you go into a recession? The point being is our job is to look a little bit further into the future.
Bitcoin slipped to as low as $15,700 in November as the crypto market deal with the insolvency of crypto exchange FTX and bearish sentiment in global stock markets. Prices mostly ranged between $15,700 and $17,500 until the first week of January. The cryptocurrency has surged since, alongside growth in E3TH, decentralized finance DeFi markets, and the broader equity market. Before retreating, Bitcoin reached 5-month highs above $23,500 earlier this week as traders took profits. However, some analysts say that while overall market sentiment cannot be called bullish just yet, the recent price and on-chain data suggests that Bitcoin could be in the later stages of a bear market.
Yeah, most people want to go back to the 1970s because that was the ghost
High
of the
inflation.
baby boomers past, right? So that's why J. Powell, classic baby boomer, his ghost is, I'm not going to be Arthur Burns. I'm never going to let inflation come back. Right? That kind of weird inflation went down, then went up, then went down, then went up, was, I think, a demographic phenomena by these baby boomers, right? They all came into the workforce at the same time. They're all about 30 years old when that happened. And they all started, they were in their 20s and 30s and they all started consuming stuff. And it was the largest population bulge in all history. I think the actual best comparison is post-World War II. Now, we're going back a long way here, but why World War II? So the pandemic shut everybody out of the workforce and factories couldn't produce goods any longer. So we have this supply issue and everyone came back out and went, I want to buy stuff. I've been locked in my house for so long. World War II was that, but bigger. And so what happened is all the factories were making munitions and now they had to suddenly spin up and make washing machines. And it took them ages to get everything sorted out and supply chains were broken and the ships were all blown up and all of that stuff. But people came in and they wanted to buy stuff. They had some optimism again. And prices rose 20%. So CPI inflation got to 20%. What happened 2 years later is it went negative because this wasn't demand-led. Right. It was just this weird supply-demand imbalance that happened for a short period of time. And it's the same thing here. I think we're fighting the wrong ghost, the ghost of Arthur Burns, and that everybody wants to be Volcker, and Jay Powell wants to have his book put out of Inflation Killer. And so he can look proud to his kids, when I think the reality is they're fighting the wrong thing. If we think about inflation now, well, we've got a bunch of really older people, which are the baby boomers, who are coming out of the workforce in record numbers. Labor force participation rate, i.e. the number of people in the workforce, is shrinking. And then we've got globalization plus technology in the middle of all of this.
Although current Bitcoin performance suggests that the bottom might already be in, we are not out of treacherous waters yet, as we have not seen a full year pass since the 2022 bear market rally. Analysts at crypto exchange Bitfinex said in a markets note this week, early 2020, before the third Bitcoin rally of 8 green candles, was a time of massive volatility amongst bearish macro conditions. This might be what we experience now in the first and second quarters of 2023, the analysts added. The note cited Glassnode that suggested short-term holders STH of Bitcoin selling now at profit, while long-term holders ETH continue to hold massive spot positions, a move that looks increasingly bullish for Bitcoin.
There'll be some choppiness as well, so it's not a up-only market. And then the year after that, when the Federal Reserve's dealing with now kind of sticky unemployment, growth that's not great, that's when they kind of tend to do a bit more QE, maybe chuck in another couple of rate cuts. And that's usually when the market goes, great, it's all over, and we go off to the races. So, it's not an instantaneous V shape. We'll all get back to full bags again, but it'll feel a lot better over the course of this year. A bit shaky. So every time the market sells off, everyone's going to see it's going back down to the lows. We're all screwed. I don't think so. So I think it's part of the bull move off the low. I've been buying, adding as much as I can every time I get any free cash flow since June. And I think it's real. Of course, we'll get some sort of correction. My actual fear to think through, to get a bit more markets related, my fear here is, okay, the institutions and everybody FOMOs in. So ETH, let's say it hits 3,000, whether it's this year, next year, right? Well, there's going to be this stampede for people to come back in. There's 18% of the entire crypto market in stable coins, plus all of these institutions are waiting for price action. Now we've got a massive issue that ETH is deflationary the more activity there is. So you're going to get more people joining the space when there's less supply, and it's going to get price dislocations. I'm not sure that this deflationary thing, part of ETH, has been thought through fully what it could mean. So there's some points in time where this thing could get completely out of control. I don't think it's this year, but yeah.
So, is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.